Hello everyone and welcome to this accounting and financial reporting quick tutorial. My name is Sabin López de Goicoechea and I will be your tutor for these 5 minutes of the video. And if you join us for the course in Athena Studies, then I will be one of the 2 tutors that will be helping you with this course. So, a quick introduction of myself. I'm a third-year economics and business economics student. Since I'm in my 3rd year, I will spending the 2nd semester of the year in Santiago doing a research internship. And as a fun fact, I love mountaineering. I love mountains, climbing, and in general, all the sports that I can practice. So today in this video we will be covering chapter 6, so inventories. There are 3 types and we will start with the average cost inventory. But before going with something specific for this kind of inventory, we first have to do something that we will be doing for the 3 types we will be discussing today. So we have to know what we start with in our inventory. So in this case, we start with 100 euros inventory, and we know that we have 10 units and every unit is worth 10 euros. Okay? However, we start with that, but we will buy 25 units for 14 euros each. So this is a total of 350 euros in inventory. This we have to sum up to 100 euros. So for now we have 450 euros worth inventory. But after this, we will buy again 25 more units for 18 euros each. And in this case, since the price is a bit more expensive, these 25 units will worth 450 euros. So now in total, we have 60 units and an inventory that is worth 900 euros. Okay, because we do the sum up of 450 plus 350 plus 100 is 900 euros. Okay, so now let's go to the specifics of this kind of inventory. So to calculate the weighted average unit cost, we need the cost of goods available for sale divided by the cost units available for sale. So this means, since we do an average price for all the units, we need to do the total of our inventory in euros, so in this case 900 euros, divided by all the units we have. So in this case we said our inventory is worth 900 euros divided by 60 because we have 60 units. And this is equal to 15. So we will be selling every of our units for 15 euros per unit. So here they tell us that we sold 40 units. So this means we will be selling 40 units times 15, which is the price. So the formula is cost of the good sold equal to the number of units sold times average cost per unit. So as I said before, this calculation is 40 times 15, which is equal to 600. But be careful, because 600 is the value of the goods sold. Okay? So since we know that we have 900 in the inventory, but we sell 600 euros, we have to do a simple calculation, which is 900 minus 600 equal 300. So here, as we can see in the picture, we have in the left all the goods that we buy and the price at which we buy it. And then in the right side, we have all the goods we sell at the price we sell it, which is 15. And in total, it is 600. And then at the end of the balance, we have the total value of our remaining goods. Okay, I hope this was clear. And we can go to the next two methods. We have the first in, first out, which is FIFO, and then the last in, first out, which is LIFO. An important thing is that the FIFO method is one that the International Accounting Standards Board allows, so it is allowed in almost all the world. However, LIFO is only allowed in the US. Okay? So this is something important, or a characteristic of one of these two methods. So FIFO is used in companies assume that all the items to be sold first, because it is first in, first out. Price of the oldest item will determine the cost of the goods sold. And remaining inventory consists of most recent purchases prices. So FIFO is used in companies where inventory is perishable or time sensitive, like in medicine or in a supermarket. And then we have LIFO for companies assume most recent items to be sold first. So the opposite case to FIFO. Prices of the most recent items will determine the cost of the goods sold. And remaining inventory consists of oldest purchase prices. So everything is the opposite than in FIFO. And for LIFO, LIFO is used in the US for companies that wants to reduce taxes. For example, imagine that prices are rising and a company wants to reduce taxes. So in order to have less inventory, they will use LIFO. Or for companies which have inventories that are not perishable. Okay, I assume this is clear. Let's go to see it. So in this case, we have exactly the same as before. So we have 60 units and 900 euros worth inventory. However, now, the only difference is the way or the order at which we sell it. So now we see that the first units to enter in the company were these units here, and then these units. Okay? So since it is called first in, first out, we will be selling first the units that were in the company first. So we have to sell 40 units. So we sell all the 10 units that were at the beginning of everything. And we sell them at their prices. So we bought them at 10 euros and we have 10 units. So we will sell these units at the same price. But it is not enough because we need 40 units. So in this case, we will also sell the 25 units we first bought in the company and at their price. So in this case, it is 25 units for 14 euros. However, we also need 5 more units to sell the 40 units we are selling. So in this case, we will take 5 of the last units. So in this case, it is 5 times 18. And we just sum up everything. And this is equal to 540, as we can see in here. And this is the quantity we are selling right now. And as we can see, the ending balance inventory is 900 minus 540. And here we have everything we sell. Here we have, as in the past case, everything we buy. And after the 900 minus 540, we have the remaining value of the units in our inventory. Okay? And then we have the last example, which is last in, first out, which is the opposite case. So again, we have exactly the same trajectory than with the other cases. But for this case, we will first sell the last units we bought. So we will start here with these units, and then we will go with these units, and lastly with the first units we had in our inventory. So in this case, we need 40 units. So we will be selling 25 units for 18 euros each. And we will also sell 15 more units for 14 euros. As we can see, we can sum up the quantity and we have 660. And for the ending balance inventory, we will be doing again the same, 900 minus 660, which is equal to 240. And we can see all of this reflected in the image we have in the left side. Okay? So a quick summary of all of this. So we have been beginning with the balance inventory of 100, and then we bought different units for different prices, and we have to sell everything. Well, we have to sell 40 units. The difference can be reflected here. So the cost of the goods for FIFO were 540, and the ending inventory was 360. For LIFO, the cost of the good were a bit more, so 660, and the ending inventory was 240. This is because the price of the goods was increasing with time. And then the average cost, we have cost of the goods 600 and ending inventory 300. Thank you for listening. I think this video was helpful. And don't hesitate to purchase the course and to join us for these fantastic courses. Thank you very much.